well, let's now welcome on board the management of IndiaMART. The company has delivered their quarterly numbers. We have seen, a lot of traction in the stock price as well, undoubtedly. So let's bring on board Mr. Dinesh Agarwal, the founder and CEO of IndiaMART. Mr. Agarwal, thanks so much for taking out time. The first parameter when we look at IndiaMART's numbers is the collections. And what we notice is that there has been a drop in your collections on a sequential basis. So if you could talk about that, what's the reason behind that?
Yeah, so quarter four has always been very different for collection. If you look historically, you will find that the quarter four, because of the March ending, many businesses want to complete their budget and complete their tax matters. So quarter four has always been much bigger than quarter one or quarter three. So if you compare with the quarter three, we are almost in line with the collections. And if you compare with the last year, when there was a severe lockdown, and this year there was a severe pandemic wave during the April and March. So April and May were more or less washed out. And I think, but the recovery has been pretty sharp, and we have been able to put 170 crores of collection from customers.
Okay. Mr. Agarwal, web traffic in India has grown significantly, and as we know, the pandemic, the whole work from home scenario has sort of given it a further boost. Do you see that continuing? And, do you see more and more businesses opting for platforms like yours as opposed to, the traditional physical mode of connecting with businesses? How do you see IndiaMART sort of capturing that opportunity?
Yeah, if you see our web traffic and inquiries and unique senders trend, more or less you will see that ever since July last year, they have grown at around 30-40% as compared to the previous years. And the good part is in this particular quarter was that despite the fact that there were severe COVID 2.0 wave as well as partial lockdowns, we did not see traffic decline just like in the previous year lockdown in April, May, June. So our traffic is best ever this particular quarter at 268 million. And we hope that this would be a sustained adoption of internet for all businesses, including IndiaMART. And that should help us in the monetization in times to come.
Mr. Agarwal, very curious to ask you, with Reliance's recent most acquisition of Just Dial, Tata entering the space as well, how is it that you are seeing the business landscape evolve, and what kind of competition could it throw up for you?
So I think if you look at IndiaMART, or if you look at Google, or if you look at Facebook, or even Amazon or Just Dial, all of us together, I think we are still scratching the surface of the huge internet population that has come online in the previous 3-4 years. And one IndiaMART is solving very small section of the problem. One Just Dial is solving a very small section of the problem. I believe the more and more entrepreneurs join in the foray, and more capital that will come into the market, that will expand the market further. Having said that, IndiaMART has created its own space and a network effects, which you have seen started kicking in the last 2-3 years, where there are more buyers coming in, so more suppliers coming in. And then we put up a AI-based database matchmaking engine to do a better matchmaking. So we believe that more players would expand the market, and over the time, those who perform better and those who are able to deliver better will probably gain larger market share. So I don't think any of this is a negative news. It's a better news for us, better capital coming in, better entrepreneurs coming in, and expanding the entire ecosystem.
Sure. A large part of your focus so far has been on your ARPUs, which have been going great. Just wanted to understand that how is it that you're managing to scale up and stay put at 50,000 rupees in terms of your ARPUs? And also, how is it that you think that you can better these levels? Maybe deeper penetration?
Yeah, sure. So if you see, ARPUs have been growing at a smaller pace from 33,000 about 4 or 5 years ago to about 44, 45,000 until last year, slowly and slowly. However, in the last year, because ARPU is a function of total revenue and divided by the number of customers that we have. And since in the last 1 year, if you see, we have lost first in the last year first quarter about 14,000 customer. As against that, then we make up the customer base, and then again because of the second wave of the COVID, we again lost about 6-7,000 customer this particular quarter, and most of the loss has been coming at the bottom of the pyramid in the silver monthly category. So that is bumping up the revenue per customer, because most of the upper value customers are still staying with the IndiaMART because they see a longer term engagement with IndiaMART. As the number of customers start to increase, I think ARPU should stabilize at around 44,000-45,000 rupees as it was. This particular quarter is probably an aberration.
Mr. Agarwal, good morning to you, and that's a very interesting perspective, and it makes sense now when you talk about the increase in ARPU. But that leads us to the next question, which is you have a unique sense of how the reopening trend is going, and a lot of people have stopped short of calling it right now and saying that the trend is completely reversing. What are the signs that you're seeing right now? At what stage are we at right now?
So, as I said, unlike the last year same quarter, the buyer traffic hasn't really dipped madly. The buyer traffic has actually improved, so internet adoption has further improved. But however, if you look at our customers, most of the customers come from very different industries, and they are small and medium businesses in nature, and many of them have had irreparable losses because of the two successive waves and lockdowns, and many industries are still out of favor. So I think on one side, in certain industries we are seeing a very good recovery, almost like a V-shaped recovery. However, in certain industries such as related to education or related to fooding or related to conference event, high fashion, I think we are still seeing a very slow recovery, and many of the smaller businesses in general are facing challenges, not able to survive. So I guess it will be a mixed kind of a recovery, given and people are very cautious this time, unlike the last time when people thought in January, February, March that the corona is over, because this particular April, May thing had come in as a pure surprise and it was a lot more severe. I think people are very cautious this time. So on one side, we are seeing a very good recovery in certain industries. On the other hand, I think certain industries will take time to recover.
Mr. Agarwal, there's a significant amount of cash on your books, 2,500 crores, which is roughly 4 times your annual turnover. Aisha has already mentioned the fact that this is now seeming to be developing as a very competitive landscape for you. Any potential for inorganic growth that you're looking at, and how are you going to use this cash?
So, as I have mentioned earlier during our QIP fundraise time, so we had about 1,000 crore before the QIP and raised about 1,070 crores during the QIP. And if you see, our deferred revenue is about 700 crores. So that leaves us with about 1,500 crores of 1,600 crores of investable cash. And we have made certain progress in the areas of like accounting software, logistics software, distribution management, and order management.
Right. You know, that brings me to my next point, Mr. Agarwal. The fact that up until now, your acquisitions as well have been just minority stakes. Why is that you've not gone out and, you know, bought a full company up until now? Or is there a strategy here which is in place?
So those two are different ones. See, one we have started to do inorganic foray only about a year ago. You know, our first investment in Vyapar was only in 2019, and then everything happened in 2021, more or less. So we are started to look at the entire space, scouting for the different kind of companies. I think that we have made some 2-3 investments in the last quarter, and we'll continue to look for 1 or 2 every quarter. That will give us more insight into what companies we would like to acquire. Because once you do one investment, you are probably meeting 20 companies in order to understand. And that will give us ability to understand that which companies are really ready and can fit into IndiaMART ecosystem well. So if you look at our ecosystem development slide, we had said that we will continue to focus on accounting, tax, invoicing, logistics tech, distribution management, procurement management, payment, invoice discounting, and those areas. And if any opportunity comes in for complete acquisition or majority acquisition, we will see how soon can we find that.
Okay, Mr. Agarwal, great to have you on the show. Thank you so much for taking the time out and speaking with us. Big news development. The